automated strategies are now a well-established form of trading, and Dukascopy's Forex competition aims to find the most talented Java programmers in the world. And we've flown August winner from Canada to Geneva, and he gained returns of 45% in 1 month. And this is the winner, Paul Lamb, who's come all the way from Canada. So can you tell people about yourself? Are you a full-time trader or is it just a part-time thing?
This is a part-time thing. I'm an engineer. I have a full-time job, 9 to 5. And after work, I do my trading, I do my analysis, my Forex programming, and basically software development.
So what's your long-term aim? Do you want to become a full-time trader or do you always want to maintain your job?
I prefer to have 2 jobs. I hope to keep this going, gradually increasing my capability, my skills, and my experience. So perhaps one day this trading can take over my first job.
And I understand the Forex competition has been quite generous for you.
Yes, it has. Thank you very much. I've won 3 times already, mostly due to luck, if I may say.
So is it a case that you're always using the same strategy and just making it better?
I started with a basic concept, and I just keep building on it, keep adding stuff, tweaking it, and gradually, month over month, I've become quite lucky, if I might say.
So it's the morning after the night before, and it's time to get down to business. So Paul, can you talk me through your strategy and how it works?
There's always a trend, either going up or going down, but inside that bigger trend, there's the ripples within that trend. So what my strategy does is identify the bigger trend and then tries to get an entry at a counter ripple so that you get the lowest price in the upper trend.
You've made that sound very simple. Is there a way that you can talk me through how that works in terms of the programming?
I use 2 time frames, a higher one and a faster one. On the higher time frame, it tries to identify the trend by using a simple moving average. So any price above that particular moving average, the strategy identifies it as bullish, for example. If it's below another moving average, it's bearish. And then, secondly, I look at the shorter time frame. I borrow some ideas from the counter channel, so that if a price breaks underneath and then above it, a lower basically from an oversold condition, then I will enter for a long position.
What about the pairs that you can use it on? Can you use it on any currency pair?
You can, but then if you win or lose, then that's another concern that you have. I usually focus on the euros and the Aussies, just because these are the pairs that I'm most familiar with myself. So that's what I used.
I know this is just a contest on demo accounts, so if you were to make it for a live account, how would you adjust your script?
First of all, of course, less leverage I'm using. Right now, I'm risking about 25% per trade. Perhaps I'll move it down to less than 1% at least, adding more position management. Right now, it's quite simple. I just stop loss, target, and that's it. But we can make more than 1 trade, because that's actually one of the rules we have in the contest. But in real life, I would prefer to ease into a position and ease out gradually. So taking at least like 3 or 4 and possibly more trades for a single position.
So it's time to get an expert opinion on Paul's script, and I'm joined now by Vagram. So can you point out some of the most interesting parts of the script?
First of all, we can see that the author of the strategy is using a lot of primitive arrays to store different statistics on currency pairs. For example, he stores indicator values, volatility parameters, and also parameters on the stop losses. And this allows him to get all the information whenever he needs it right in the script. Here in the code we can see the primitive arrays which store different values of the indicators. These first 2 are for the moving average, and this one is for the volatility. It stores the values of the ATR indicator. And here we have another array which stores information about the sentiment on all available currency pairs. And for the sentiments, Mr. Lam is using enumerations, so he has three basic types of the sentiment: bearish, bullish, and neutral.
So how do the signals work? How are they structured into the script?
The trader uses different parameters, different indicators to buy or to sell. First of all, the moving average are widely used across the strategy. The long-term moving average are helping to determine the long-term trend in the market, because we always have to follow the trends which are in the market. There is a candlestick pattern which you can see right in the script. And the rule of the candlestick pattern is quite simple. It's just a reversal pattern, and the trader is just following the special combination of highs and lows, which indicate that this is the right place when the market is planning to change the direction.
If you want to know what it takes to become a J4X winner, then you can take a look at the complete script on the Dukascopy website. I'm Peter Lovegrove for Dukascopy TV.